Good afternoon, Blue Line traders. I'm Sean with Blue Line Trading, and this is your daily market update video for January 19th of 2023. In this video, we will cover today's price action, and we'll also briefly touch on yesterday's price action because we didn't have a video out yesterday. We're also going to post this video onto YouTube, so those of you who are watching it on YouTube and are not members yet, go ahead and go into the bio and click on the link. That will give you access to our free chat room through Slack, and through there you'll get access to all our content and our trading courses. Without further ado, let's jump into the update. Starting with the market overview, we're starting on the S&P futures chart on a 15-minute time frame, and I'm going to briefly go over yesterday's price action. Now, yesterday's price action was somewhat bearish, and the reason I'm saying it's somewhat bearish is the opening prints were the high of day and the closing prints were the low of day. That's a sustained downtrend that lasted the entire session, which tells us that sellers had control intraday. Now, how strong was that control? Well, when we come down to the intraday volume, the majority of the move was on decreasing volume. So even though they had control, I don't think they had very much strength, which supports the theory that we've been saying that we think that this is a bounce to the downside that will find support in the 3850 area. And we did have this pop in volume towards the close, but based on the market diary, I believe that that is dealers and market makers offering positions at the end of the day to remain delta neutral. It didn't have much impact. Moving into today's update, I've got your close from yesterday marked right here. And when we follow the median line, you'll notice that the overnight session was 95% net short, which means that sellers had follow through from yesterday's session in the overnight session. The high of the session was put in within the first 2 hours, which means that the momentum was in the seller's direction going into the open, and they had conviction as they took out yesterday's low and they held it. Now, they did have a back test of the median line at about 12:15 a.m. last night, but from there things got pretty bearish and they pushed it all the way down to the session low, which was put in at 5:30 a.m. and that was at 3,900 support, so that's not surprising. Now, coming into today's open, we were at a balance to the downside, but with the conviction from sellers, we know that a median correction was not guaranteed, and upon the open we actually saw follow through to the downside, which took out the overnight low initially by about 5 points. Now, we saw a reversal off that area and then we pushed up. We almost got to the median line, but buyers did not have enough strength to do so. And then sellers pushed it down into the close and closed at the midpoint of today, which is somewhat neutral. And it looks like they're trying to climb higher in tonight's overnight session. The big question of the day is going to be centered around the price action that started right here and bounced off of 3,900. Now, the question is this move up off of 3,900 a more significant bounce within the substructure, and how high can that bounce go? And to answer that, we're going to look at all the evidence that's available to us. Starting with the price action, we're going to start with the overnight price action in the green box. And the overnight price action is going to be bearish. And the reason it is bearish is the opening prints put in the high and the closing prints put in the low, which is the definition of a downtrend and is basically sellers getting follow through from yesterday's sell-off. Moving on to the daily session price action in the blue box, it's neutral. And the reason it is neutral is we opened at the midpoint of today's range. Sellers pushed it down but couldn't get follow through. Buyers bought it up, couldn't get follow through. And ultimately we closed at the midpoint of the session. So that's why that is neutral. Now, when we come down to the intraday volume, it's dense with buying bars, which tells us that buyers had control the majority of the session. When we pull up the session-based volume profile, we have a lower point of control and a lower value area today, with the profile shape being an uppercase D. Now, typically uppercase D profile shapes would mean that follow through to the downside is possible, but we are looking like we're going to fail to put in a new low here, and buyers had control most of the session, which tells us that we might be bouncing from this point and then coming down further. Another clue that we could be bouncing here is the fact that when we come down to the RSI, from this point right here in yesterday's session, the RSI has been climbing pretty healthy, and the prices continue to go down all the way till this point. That's bullish divergence, and that tells us that this could potentially be a short-term pivot point, and I say short-term because we're on a lower time frame. Moving over to the daily time frame to look at our daily candlestick location and structure, we're looking at this candle right here, and they are both bearish. Location is bearish because we had, looks like a kicker to the downside, where we opened at the bottom of the real body and then pushed down further. And the structure is bearish as well because we opened near the highs and closed near the lows. And just a reminder, this candle is combining the overnight and daily session. When we come down to the daily volume, we did have a slight decrease, but this is still somewhat substantial volume. It's not impulsive volume, but it is substantial compared to what we've seen recently, which tells me that if we are getting a bounce, we should see another leg down. Moving over to the market internals, starting with the VOLD, sellers did have a strong day as they broke the benchmark, but it was weaker than yesterday, which would also support the fact that there is a shift taking place here, and we could be seeing a bounce before we see more downside. When we come down to the ADD, there is bullish divergence, which would also support the theory of a bounce here. And when we come up to the tick, it actually favors the buyers. I'm going to move this over. You see that there's a lot more density up top, and we have this slow shift in control where we saw the sell-off, and then today we saw strength, but not very strong strength compared to these days, which would tell us that buyers were present today. They bounced the market. This bounce could go a little bit further, and then we'll see more downside and weakness before buyers take over again. When we come up to the S&P sectors, risk on was leading to the downside today, but everything else was pretty much mixed, and we did have some strength in risk off. When we combine all the evidence available to us, it's pretty clear that at this point right here, which was yesterday, something changed short term in the market. And the best way that I can describe the market currently is that sellers own the monthly trend, they own the weekly trend, and buyers own the daily trend. And buyers started owning the daily trend at this point right here, and they still have it technically because sellers haven't taken out this low. Now what changed at this point right here is sellers gained hourly control and own the hourly trend. But we are seeing that sellers are becoming weaker as this is moving down, which tells us that this is probably not a major market pivot point, which supports our overall theory that we're going to go higher eventually, and that this pullback is part of the substructure. And then because they're losing momentum and we're seeing buyers get stronger in the evidence, it would support that there is a bounce coming. Now, I'm not seeing impulsive strength like we were here from the buyers. So to answer the first part of the question, yes, I do think that this is a bounce and that there will be a little bit more downside before we start moving back up again and take out this high. The second part of the question is, where could this bounce go? Now, when we zoom in here a little bit further, it's pretty clear that there's some type of zone here of importance, because look at these long wicks that come out of this area. So what I want to do is I want to grab a fib and I want to measure from up here to our low right here where we think this bounce is starting, and I want to come up and look where we would land the 100% extension at 38.50. That's going to be right in the 39.80 zone, which is in this wick area where we have all this demand. So we know that there's an important zone here. There was demand when we were above it, we broke below it, and now it's probably going to act as resistance. So I'm thinking that this bounce could go as high as the 39.80 zone. And the other thing that I would like to check is, let's run a volume profile from here to here and we have a point of control that's in that area. It's at 39.65. I also want to measure this as well, and we have one at 4,000. We know 4,000 is a very important level, and the midpoint between these important levels is where we think this bounce is going to most likely go. So that makes a lot of sense. So there is a possibility that it could get cut off right here, because this could be a defended area, but you know, coming up the previous time, this wasn't really highly defended. It was the first time they reached it, but then they easily broke it the second time. So I'm thinking 39.80 in that zone, but it could be as low as the 39.60 zone where we reject, and then we would see another move down to the 38.50 zone, and then from there should start climbing up again. And that answers the entire big question of the day. Moving into the watch list tickers, we're going to start with SPY, and we are positioned bearish on SPY. We got in last week when we posted everything in the chat room. Positions up about 15 to 20 grand. Everything's looking good. Now, if you didn't get in initially when we had mentioned to get in, there could potentially still be a trade here, and that's because we are potentially looking at a bounce here. And when we looked at the S&P earlier in the video, there was these 2 point of controls that we said to look at, and they're here as well. So the first one and the more major one is probably at 395, closer to 396, and you have the other one on this small peak right here, which is somewhere in the 398 zone. So with that said, I would be looking at this area right here to act as a supply zone and be your entry point for the next portion down. Next on the list is Tesla, and everything's actually looking okay with Tesla. We did have a pullback today, but I do think there's more upside. We are holding the 8 EMA, so as far as an entry goes, you could enter off the 8 EMA. You just don't want to see a bearish break of it and a close below. And again, here the target, or the first target, is 140. The more bullish target would be in the 166 zone. Now you do have to use caution here because we did get pretty close to 140, and what you don't want to see here is a failure to make a new high from this high right here. So if we come back up and then we lose that next high and we come back down, that could be signaling that this was the top. So use caution on the next move up. We want to see a new high. If we don't get a new high, I would get out. Next on the list is Netflix, which lost the 8 EMA today. Now we haven't gotten too close to our top target, which is at 350. So to determine if this is going to be the top or not, we need to see what happens tomorrow. If we break the 21-day moving average and close below it, it's going to solidify that we're probably going to get a cross, and the 8 EMA is going to start coming down and cross with the 21, which is going to be a sell signal. Now we also have a sell signal getting ready to form on the daily MACD in the form of a cross as well. The histogram is ticking downwards, and we have negative divergence that started right here. So my plan here, because I do want to take advantage of this trade, I think it's going to be a good one, is if we don't put in a new high, my signal to enter is going to be the cross on the MACD, and I will find confluence in this area as well as far as price action is concerned. But at the same time, remember, the price action breaking these moving averages is a pretty reliable signal because it is price action related. So this combined with this would be enough for me to take a bearish entry. Lastly, I just want to touch on Microsoft because we called this out in the chat room yesterday. And for anybody who took this trade, congratulations, you probably made a good amount of money. We had this signal right here, this bearish engulfing daily candlestick right off of resistance and the point of control. It was a very good signal, and look what happened today. If you had gone bearish when we put out the signal, you would have caught this whole move down today, which was about a 5-point move. So if you took 100 shares, you would have made 500 bucks, and that was an easy $500. And this is likely to go down a little bit further, so we'll reevaluate this tomorrow. And I'm guessing that after we do our analysis over the weekend, there is going to be a follow-up trade here, most likely. That's pretty much all I got for you guys today. If you have any questions, feel free to post them in the chat room. and I will see you guys all tomorrow.